COP29 presidency unveils a draft climate finance deal calling for developed nations to provide $250 billion annually by 2035. Japan's core consumer price index rises 2.3% in October year on year. And the Kremlin on Friday calls the new US sanctions on Gazprom Bank an attempt to disrupt Russian gas exports. Hello, good evening, and welcome to the Economic Bulletin here on Qnews, where we present comprehensive coverage and expert insights on the latest economic trends and developments. And we'll start in Asia tonight, where government data has showed that Japan's nationwide core consumer price index rose 2.3% in October from a year earlier. The index includes oil products but excludes fresh food prices. The growth slowed from a 2.4% increase in September, primarily due to the base effect of last year's government decision to halve fuel subsidies, which led to a surge in prices starting in October 2023. The data also indicated ongoing increases in service prices, which the Bank of Japan closely monitors to assess whether companies are passing on higher labor costs. Beijing expressed that maintaining stable, healthy, and sustainable economic and trade relations between China and the US would be mutually beneficial. China's Vice Commerce Minister Wang Xuan made the statement during a regular press briefing. Wang, who also serves as China's international trade representative, assured that China would be able to resolve and resist the effects of external challenges, including potential tariffs from US President-elect Donald Trump.
我们认为 中国和美国如果能够在经贸关系方面保持一个稳定的、健康的、可持续的这种发展态势，既有利于中国人民、美国人民，也有利于世界各国人民。
Japan's cabinet approved a 39 trillion yen economic stimulus package aimed at boosting individual incomes. The plan, central to Prime Minister Shigeru Ishiba's new administration, focuses on digital innovation, subsidies for rising energy costs, and support for low-income households. It also addresses Japan's low birth rate and provides assistance to working women and the elderly. Key measures include raising the annual tax-free salary threshold with a proposal of 1.78 million yen. The package also supports small businesses, regional economies, and industries like animation. The COP29 presidency has unveiled a new draft climate finance agreement, which proposes that developed nations lead efforts to provide $250 billion annually by 2035 to support poorer countries. The draft also set a broader goal to raise $1.3 trillion annually by 2035, which would include funding from all public and private sources. Governments that would be expected to lead the financing include the European Union, Australia, the United States, Britain, Japan, Norway, Canada, New Zealand, and Switzerland.
Today we have published a streamlined package of the draft decisions, and that includes also a $250 billion dollar goal by the developed countries. We will continue to work with the parties to make the final adjustments to those issues that are still outstanding, and we will try to make sure that, and we are committed to make sure that this COP has the most ambitious outcome by pushing all the parties to get there.
Moving to Europe now, and the Federal Statistical Office of the Statis reported that Germany's economy grew less than expected in the third quarter of 2024. Gross domestic product increased 0.1% compared to the previous quarter. Germany has narrowly avoided a recession this year, which is defined as 2 consecutive quarters of economic contraction. Household consumption saw a slight increase of 0.3%, while government spending rose by approximately 0.4%. However, exports of goods, a crucial component of Germany's economy, declined by around 2.4%. Eurozone business activity sharply declined in November, with the services sector joining manufacturing in contraction. The composite PMI dropped to 48.1, signalling the steepest decline since January. The unexpected contraction in business activity was primarily driven by a sharp decline in the services sector. The flash Eurozone Composite Purchasing Managers Index, the PMI, fell to 48.1 in November, down from the neutral 50 in October, marking the steepest decline since January and falling below market expectations for no change. The services sector, a vital component of the Eurozone economy, contracted for the first time in 10 months, with its PMI dropping to 49.2 from 51.6 in October. Meanwhile, manufacturing remained in a prolonged downturn, with its PMI falling further to 45.2, marking 20 consecutive months of declining production. US existing home sales surged 3.4% in October, reaching a seasonally adjusted annual rate of 3.96 million units, marking the first annual increase since mid-2021. This rebound followed a brief decline in mortgage rates, with sales rising 2.9% year over year. October's increase likely reflects contracts signed in August and September, when mortgage rates were lower ahead of anticipated Federal Reserve rate cuts. European Central Bank President Christine Lagarde has renewed her call for economic integration across Europe, arguing that intensifying global trade tensions and a growing technology gap with the United States create fresh urgency for action. She emphasized the need to integrate EU capital markets, noting that while progress has been made, national interests often dilute proposals. Lagarde pointed out that EU households are holding 11.5 trillion euros in cash, which could be redirected into long-term investments, potentially unlocking 350 billion euros annually. To facilitate this, Europe should reduce investment costs and ease regulations. She proposed a unified EU regulatory framework to simplify cross-border investments, but also stressed the need for more funding for innovative companies and startups in Europe.
While banks, play an essential role in the European economy, we know that integrated capital markets are needed for financing, in particular, early-stage breakthrough innovation. And it is key for becoming more resilient in a fragmenting world economy. Capital markets, in our view, is the missing link for Europeans to turn their high savings, more on that later, into greater wealth, which will ultimately enable them to spend more and strengthen internal demand.
Christine Lagarde there. Now, still in Europe, where EU trade ministers have met in Brussels to discuss the future of the European Union's trade policy, focusing on relations with the United States following the recent presidential election. Trump has hinted at imposing new tariffs, which could affect the two major trading partners. Despite this, European Union officials remained optimistic. Valdis Dombrovskis, European Trade Commissioner, emphasized the EU's commitment to constructive engagement with the United States and indicated that any potential tariffs would be carefully considered. A Polish official, Ignacy Niemczycki, stressed the importance of EU unity in presenting a cohesive stance to the United States administration.
It's clear that US is our strategic ally, so it's important to continue close engagement.
In Brussels, European Union trade ministers have tackled pressing global trade issues, with relations with the United States at the top of their agenda. While the transatlantic partnership remains vital, challenges like industrial subsidies and tariffs continue to strain the alliance.
And welcome to this press conference.
Ministers also focused on reforming the World Trade Organization, positioning the European Union as a leader in reshaping global trade rules for a more balanced system. Their message was clear: Europe is ready to lead, but cooperation with partners is key. A day later in Frankfurt, European Central Bank President Christine Lagarde called for urgent reforms at the European Banking Congress. She emphasized the need to build the capital markets union to break down regulatory barriers between member states.
Tomorrow is today.
Lagarde warned that without deeper financial integration, Europe risks falling behind on the global stage. A unified capital market, she argued, would strengthen economic resilience and attract global investment. These two events highlight the European Union's dual focus: forging stronger ties abroad, especially with the United States, while building a more integrated financial system at home. As global challenges mount, Europe is striving to redefine its role in trade and finance, laying the groundwork for a stronger, more unified future.
Now, for more on this, joining us today is the economic expert, Nicholas Ioris, to discuss the main results of the EU Leaders Trade Summit. Thank you very much for being on our programme. Now, how do you assess the EU's future trade policy direction, especially in light of the growing importance of trade agreements with countries other than the United States?
Yeah, the shift from the United States to potentially, Gulf states as well as African nations is going to be critically important for the European Union, especially in light of what the Trump administration may be proposing and carrying out with increased tariffs, not just on China, but across the board. And so you've seen the EU understand the need to pivot both internally and work ways into increase trade liberalization within the EU, but also to expand to different regions in which they traditionally have not sought those relationships.
And with Trump, of course, promising to put pretty heavy tariffs on countries outside of the United States in trade, what do you expect for the future of EU-US relations when it comes to trade?
It could be very tense moving forward, unfortunately, and I think that is to the detriment of the relationship between the United States and the EU, but also to the detriment of consumers and more innovation and more economic prosperity. I worry that if the US and the EU are engaged in some sort of trade war moving forward, it's going to decrease productivity and it's going to regress the free trade ambitions that we've had that's led to so much economic prosperity. And it's not just the US either. We have to remember that the EU is implementing a carbon border adjustment mechanism, or effectively a carbon tariff that could be implemented on US industries and other parts of the world. So there's a lot of trade tariffs talk, not just from Trump, but from other countries and the EU as well.
Are we witnessing the slow death of globalization?
Boy, I hope not. Given the economic and environmental benefits that we've seen from globalization, I think it would be a huge mistake for countries to retreat. I do think we are trending towards more economic populism and nationalization. I think in spite of that, though, the large majority of trade will still move forward because of the benefits. That said, there's being more protectionism, there's being more industrial policy for certain industries. And I think that's going to continue. And what countries justify for national security purposes with respect to countries like China and Russia and some others, I do think that there's going to be more investment in specific industries and more protectionism in specific industries.
And what would you say are the major challenges facing the WTO? And how do you think the EU's role within the WTO might influence the future of global trade?
I think the biggest challenge with the WTO is coming to conclusions and enforcement faster. A lot of the damage that has been done by countries dumping and by countries going around WTO rules and regulations, the damage was done after the fact. By the time the WTO comes to its conclusion, industries are already suffering from those policies and those anti-dumping initiatives. So I think the WTO needs to restructure in a way that has stronger teeth, but also comes to decisions much more quickly so that any ramifications for these anti-trade policies that increase benefits from trade are corrected much earlier in the process.
And in regards to the president of the European Central Bank's statements, how can deeper economic integration within the EU help Europe to navigate the increasing global trade tensions and also growing technology, the growing technology gap with the United States?
That's going to be critically important. And I think seeing what some countries within the EU have already said and promised, I think any opportunities to continue to reduce trade barriers, to open up energy access, to leverage artificial intelligence capabilities, those are going to be paths forward where there can be more efficiency in trade within the European Union. And there have been, I think, some regrettable mistakes within the EU in terms of energy decisions to move too quickly on net zero policies, which have shuttered and not moving away from Russian gas, for instance. I think there's much more urgency to have that energy abundance, and that in combination with the technological advancements and the uses of artificial intelligence, I think that can really streamline some opportunities for more EU country-country cooperation.
Well, thank you very much for your insights. Thank you very much for joining us. Nicholas Ioris joining us from Washington, D.C. Thank you very much. And now let's get the latest on the energy sector. Now, the Kremlin on Friday said that the new U.S. sanctions on Russia's Gazprom bank were an attempt by Washington to hinder the export of Russian gas, but said a solution would be found. The United States imposed a new sanction on Russia's Gazprom bank, blocking its ability to conduct energy-related transactions involving the U.S. financial system, banning trade with Americans and freezing its U.S. assets. The move comes as President Biden increases efforts to penalize Moscow for its invasion of Ukraine. While the sanctions target the bank, they exempt transactions linked to Russia's Sakhalin-2 oil and gas project until June 2025, affecting some Japanese firms purchasing LNG from the project. The Russian Deputy Prime Minister, Alexander Novak, has said that the global oil market is balanced thanks to the actions of OPEC plus countries and compliance with its quotas following a Russia-OPEC meeting. Novak also said after meeting OPEC Secretary General Haitham El-Ghaz in Moscow that OPEC plus countries, which are pumping around half the world's oil, are taking all necessary decisions to maintain market stability. He stated that the current market is considered balanced, largely due to the actions of OPEC Plus countries and their coordinated efforts to adhere to quotas and voluntary commitments. According to a note released by JP Morgan, projects that Brent oil will average $73 per barrel in 2025, with prices expected to end the year below $70 per barrel, while U.S. West Texas Intermediate is forecasted at $64 per barrel. The bank maintained its forecast for 2025, anticipating a significant surplus of 1.3 million barrels per day and an average Brent price of $73. It also expects global oil demand growth to slow from 1.3 million barrels per day this year to 1.1 million barrels per day next year, with China leading demand growth one final time before India takes over in 2026. Additionally, JP Morgan forecasts that large surpluses will push Brent prices below $60 per barrel by the end of 2026, with average prices of $61 per barrel for Brent and $57 per barrel for West Texas Intermediate. Oil prices held steady as geopolitical tensions intensify. Brent crude futures fell to $74.14 a barrel. U.S. West Texas Intermediate crude fell to $70.07 per barrel. Gold prices rose over 1% to hit a two-week peak as Russia-Ukraine tensions heightened. Spot gold jumped 1% to $2,969.77 per ounce. U.S. gold futures gained 0.9% to $2,698.90. The markets now, and global shares had a mixed performance as COP29 wraps its final day with a $250 billion climate finance draft proposal target from wealthy countries. In the United States, the S&P 500 was up 0.1%, the Dow Jones Industrial Average climbed 0.5%, the Nasdaq 0.2% down. In Europe, Britain's FTSE 100 rose 0.7%, Germany's DAX added 0.5%, and the CAC 40 in Paris edged up 0.2%. In Asia, Japan's benchmark Nikkei 225 added 0.7%, South Korea's Kospi was trading higher at 0.8%, and Hong Kong's Hang Seng dipped 2%, and the Shanghai Composite dropped 3.1%. Bitcoin touched a fresh record high with its sights set firmly on the $100,000 barrier by expectations of a more friendly regulatory environment under a Donald Trump administration even. After touching a fresh record high above $99,000, Bitcoin pulled back a touch to trade up just 0.5% on the day, around 98,500. The cryptocurrency also appears on the verge of mainstream acceptance since its creation 16 years ago. "16 years ago, is it really that long ago?" Now a roundup of today's key economic headlines. COP29 presidency unveils a draft climate finance deal calling for developed nations to provide $250 billion annually by 2035. Japan's core consumer price index rises 2.3% in October. And the Kremlin on Friday calls the new US sanctions on Gazprom Bank an attempt to disrupt Russian gas exports. And that's all for our economic bulletin today. Don't forget to follow Qnews on YouTube, Facebook, X, Instagram, and TikTok. Qnews EGY is our handle. Thank you for watching and stay tuned for more updates here on Qnews.